Today, I will backtest the powerful 3-in-1 indicator I found on the PineTrades channel. This special indicator combines trend and volume analysis. While many trend-reliant indicators lose money during ranging markets, this one supposedly performs just as well. I'll test it over 100 trades on the 15-minute time frame using one of the most ranging forex pairs, Euro CHF, to prove the point. For this test, I'll use an account size of $1,000, risking 1% per trade to keep it simple. Let's find out if this strategy can actually help avoid losses in ranging markets while maximizing profits in trending ones. The foundation of this strategy is the Volumetric Variable Index Dynamic Average Indicator, or VIDYA for short, created by Big Beluga on TradingView. First, let's add it to our chart. Head to the Indicator Search tab on TradingView, type Volumetric Variable Index, and select the one by Big Beluga. The main indicator features are 1. Trend cloud. A green cloud indicates a bullish trend, while a red cloud signifies a bearish trend. 2. Arrows. Green upward arrows mark the start of bullish trends, and red downward arrows signal bearish trends. 3. Volume table. Displays the current trend volume for bullish and bearish candles, along with their percentage difference, called delta volume. Positive percentage means that the trend is bullish, negative means that it is bearish, and a value from around negative or positive 10% to 0 means that the market is consolidating, which is where this indicator is unique. We'll keep the default settings for this test, but you can customize the VIDYA length, momentum, and band distances to suit different market conditions and strategies. There are many ways to trade using this indicator, such as trading trend reversal signals, using its trend direction in pullback strategies, or adding it as a confirmation tool to strengthen your existing strategy. Today, however, we'll focus on testing the most recent pivot low retest strategy as suggested by PineTrades. Here's how it works. For a long trade, ensure the trend cloud is green, indicating a bullish trend. Wait for a retest of the most recent pivot low, marked by the VIDYA line. The retest is valid if a candle's wick touches the level without closing below it. Confirm strong buying momentum by ensuring the delta volume is 30% or above. Once these conditions are met, enter the trade. Place the stop loss slightly below the retest level. Set the take profit at 2 times the risk. For a short trade, ensure the trend cloud is red, signaling a bearish trend. Wait for a retest of the most recent pivot high, marked by the VIDYA line. The retest is valid if a candle's wick touches the level without closing above it. Confirm strong selling momentum by ensuring the delta volume is negative 30% or below. Enter the trade. Place the stop loss slightly above the retest level. Set the take profit at 2 times the risk. Now let's start backtesting the strategy. I tested this strategy 100 times on the EUR-CHF pair. While the delta volume and trend analysis helped filter out many false signals, the results fell short of perfection. Here's what I found. Win rate, 38%, much lower than expected. Risk to reward ratio, 1 to 2 on all trades, making the strategy profitable despite the modest win rate. Overall, I don't recommend trading with the indicator alone. Instead, it's best used alongside your own strategy, other indicators, or price action concepts as confirmation. This is because such a low win rate can result in many consecutive losses, which might be hard to manage psychologically. That said, it can still be a powerful tool to enhance your decision-making and refine your entries and exits. Make sure to backtest it thoroughly on different pairs and timeframes, as it might perform even better in other conditions. Testing it yourself will help you gain confidence and unlock its full potential across various market environments. If you enjoyed this video, hit the like button and subscribe for more strategy backtests. Let me know in the comments what strategy I should test next. Thanks for watching and see you in the next one.